All right. Good morning, everyone. All right. So today, talk a little bit about again. We've been talking about the qualifying the client as far as the securitization of the lease and how to securitize the lease. Today, I want to talk about actually before you go out, what you should be doing, which is actually qualifying that client. Understand that if you're working with a client and you haven't qualified them, you really don't have a client at this point. So when a qualifying client, a lot of people just think of it as, are they interested? That's one aspect, sure. Is it the most important? Absolutely not. I think I can probably, and most people would probably agree with me that most people want to own real estate. So just because they have that desire doesn't mean that they're necessarily qualified. Really, what you have to delve into is a couple other things. I use an acronym, but under desirability means motivation. So, the hardest thing for a lot of new agents to do is ask for the money. Show me that you have the money or so. And this can be done in a couple different ways. Something as simple as if it's a investor looking to purchase and you haven't worked with them before, you can ask them what their portfolio looks like. How many other properties do you currently own that are similar to this property? How long have you owned them? Have you purchased anything recently or sold anything recently? So you want to get all that information, but also you can now start looking at from there when you start getting the answers, or maybe the answers are not what you were hoping for. What you can do is start going into delving a little bit deeper, such as for this next acquisition, are you planning on paying cash, or are you going to are you going to get financing? And if they say financing, what you're going to want to do is ask, well, for your financing, how much down are you planning on purchasing? So to putting down rather, so we can actually estimate. Understand that some first-time investors do not understand that commercial real estate requires a heavier down payment or larger down payment than residential. So commercial investments, which are, if it's a multifamily, it's 5 units or up. You have to go in putting down a minimum 35%, potentially sometimes 25% depending on the lender, but for the most part these days 35% down. Meanwhile, residential income like a 4-unit or 3-unit, you can get residential financing for that. So you can potentially go in as low as 10% or 5% down. So, bear that in mind when you're asking someone, because sometimes you'll get a potentially new client that really doesn't understand. They want to buy $1 million property, but they only have $150,000 or $200,000, and that's not really going to work. So it's part of the education process. The bottom line is, if they don't qualify to look, or if they're not going to qualify to purchase a $1 million property, you shouldn't be looking for that. You really need to delve down into what they are looking to do. Now, next, some agents will also say, well, you know what? I saw their bank statements, or I saw their financial statements. Maybe they were some stock and things. So, the funds and the availability of the funds, we're not necessarily the availability, but the funds themselves are really the ability to be able to purchase. The means, though, and what we mean by means is, just because somebody has the ability to purchase doesn't mean they necessarily have the means. Their assets, they might have a really good balance sheet and they could be worth millions of dollars. However, their assets may be tied up into other real estate or into other investments that they cannot liquidate at the time. So they may be cash poor. So they may have the ability, meaning they'd have to sell things and get the cash to be able to purchase other properties, but they don't have the means at this time until they do that. So these are questions that you want to ask and you delve into. Are you ready to move? What's your timing? What's your investment horizon look like? So, there are different ways that you can ask these questions so that they are not as offensive, or rather it's not as blunt as, do you have the money? I want to see it. Which is what you're kind of getting into, because you want to make sure that you're not wasting any of your time. And I can tell you stories from my career. I've had students that have called me pretending that they, for a student paper, in the real estate development school at a local university, things like that. They called me and to try and pretend that they're investors to try and get information, whatever. And I'm happy to help them. I just want them to be upfront about it, but a lot of times they'll just say, oh, I'm looking to buy this, looking to do this, and see what you do, and waste your time. I can help them. I'll usually, after hours, I'm not going to take my work hours to do that, but you can definitely help them along with that aspect. So understand who the client is, ask these questions, ask what they've purchased before, ask what they're looking to purchase. More importantly, and this is the biggest thing when qualifying a client, because they can have the desire to purchase, they can have the ability to purchase, they can have the means to purchase. But if they aren't motivated to actually purchase or move forward on the transaction, then again, you don't have a client. I mean, there are billionaires out there that don't invest heavily into real estate, or at certain points in time are not investing at all in real estate. So understand that your investments, just because they have the desire, the ability, and the means, they don't necessarily make the client yet unless they're motivated to actually acquire a property or lease a property. So that's where you start asking the questions about why. Why are you purchasing the property? What are you looking to do? What are you looking to accomplish with this investment? And this also allows you feedback so you can put the right properties in front of them. So really it's a communication and it's a process going forward. Now, a lot of times agents, though, new agents especially, make the mistake of just finding out what the client wants and to purchase, and qualifying the financial aspect of it. The problem with that, or the potential problem with that, is sometimes newer clients don't know what they want. They come in thinking they want something, but many times it'll change midstream during the review of the properties and taking a look at it. We've had clients that have come in and said, I only want corporate guaranteed single tenant net lease assets. And then they realize, okay, you know what, maybe a franchise is not that bad, especially if they have a few hundred units. It's a pretty darn strong guarantor and a better cap rate. So it varies and it changes. Their investment criteria may change. So you want to make sure that you're speaking and trying to really understand what they're trying to accomplish. Because if you can understand what they're trying to accomplish, a lot of times what they're telling you they want to purchase may not be the best opportunity and asset, and that's where you can add your value by actually showing that to them. So coming into this, you're going to, again, desirability, means, motivation, qualify your client. Don't be afraid to ask the hard questions. Don't be afraid to ask for proof of funds. When I'm working with clients, a lot of times I will ask them and say, I'd be point blank about it. And that is that, it's a pretty hot market right now, and it has been for the last couple of years. I want to put our best foot forward when we submit an offer. So if you can send me the financials, because any good listing agent is going to do the exact same and ask for that when we submit a proposal or letter of intent. So keeping that in mind, that's how you're getting the information. Working with their lenders, also you can get the information that way. If they're qualified, get them pre-qualified, pre-approved ahead of time. Don't wait till the last minute and find out that yes, they have $400,000, $500,000, $600,000 or $1 million to buy a $2-3 million property, but then they don't qualify for the financing. So get them pre-qualified, pre-approved ahead of time with a lender that you know and trust and that you can work with. So overall, you want to have a full picture and idea of what your client's looking to do. You should know, if anybody asks you a question about the client, you should be able to answer it. What do they do for the business? If you're looking at leasing, what kind of business? How long have they been in business? Where are they? Why are they looking at this location? How many employees? How does the makeup of the office space is it going to look like? If they want more open space, more of a call center, more private offices, conference rooms, things like that. You should know all of this with your client before you actually step out the door and tour them. And the reason why is that you don't want to waste their time. You don't want to waste your time. A lot of times also, especially when jumping back and now we're going into the leasing side, a lot of people don't understand the needs or the requirements for square footage, or that if they're, lately there has been a big push toward like call centers and open area, creative office space, so to speak. But really what they're doing is packing a lot more people into that office space than traditionally is allowed. In fact, traditionally, most office buildings are, they will cap you out at 5 or 6 per 1,000 square feet. So I know a couple REITs, they say that, you can't have if you have 2,000 square feet, you can't have more than 12 people in your office. They cap it out at 6 per 1,000. And there's a couple reasons for that. And people don't understand this, is that most office buildings are built, they've been built quite some time ago. They're very rare. We don't have a whole bunch of brand new office buildings. Most of the office buildings are 20 plus years of age. So they were built into a different system. So the HVAC systems and electric systems can't support 10 people per 1,000 square feet. Every body creates heat. Every computer creates heat. You need HVAC systems. You need bathrooms, things like that. So a lot of times a client may have unrealistic expectations for what their needs are. So you really need to question and qualify the client out. So qualifying the client, as a recap, is not just the financial. It's not just their desire or the ability or the means, but really the motivation and why. That's really the key thing. You want to qualify out your client with why and what their needs are, so that you can understand that and make sure that they're realistic and that it's something that you can do and help them with. Okay.